Hey everyone, welcome to this complete beginner's guide to Forex trading in 2025. If you've ever wondered, what is Forex trading and how can I start making money with it, then you're in the right place. Today, I'll break everything down in a simple, step-by-step way, so that even if you're a complete beginner, you'll understand exactly how this market works. By the end of this tutorial, you'll have the confidence to start trading on your own. So stick around, hit that like button, and if you haven't already, subscribe for more expert trading content. Alright, let's start with the basics. What exactly is Forex trading, and why should you care? Forex, or foreign exchange, is simply the buying and selling of currencies. It's the largest financial market in the world, with over $7 trillion traded daily. Yes, you heard that right, trillion. Unlike the stock market, which has fixed hours, Forex runs 24 hours a day, 5 days a week. Now here's where it gets interesting. When you trade Forex, you're always trading in currency pairs. For example, if you think the euro will get stronger against the US dollar, you buy EUR/USD. If the euro rises in value, you make money. But if it drops, well, you lose. It's all about predicting how one currency will move against another. And trust me, once you get the hang of it, it's pretty exciting. Now, before you dive into trading, you need to understand currency pairs because not all pairs are created equal. Here's the deal. Forex pairs are divided into 3 categories. Number 1, major pairs, the most traded ones like EUR/USD, GBP USD, and USD JPY. These are great for beginners because they have high liquidity and lower trading costs. Number 2, minor pairs. These include pairs like EUR/GBP or AUD/NZD, still important but not as widely traded. Number 3, exotic pairs. Think USD/TRY or EUR/ZAR. These have bigger price swings but also higher risk. And here's something super important. Forex trading happens across different sessions. Asian session, Tokyo, starts the trading day. European session, London, the biggest session with the most movement. American session, New York, where major news events happen. Pro tip: the best time to trade? When the London and New York sessions overlap. That's when the market is most active. Now, I know Forex terminology can feel overwhelming at first, but don't worry. I'll break it down in a way that actually makes sense. Pip, the smallest price movement in a currency pair. Spread, the difference between the buy and sell price. Lower spreads equals cheaper trading costs. Leverage, think of this as borrowing money to trade bigger positions. Example, 1:100 leverage means your $100 can control $10,000 worth of trades. Margin, the amount of money required to open a leveraged trade. Lot size, the volume of your trade. A standard lot is 100,000 units, but don't worry, you can start small with mini or micro lots. And here's the thing, understanding these terms is crucial because they impact your profits and losses. Alright, so now that you understand the basics, how do you actually start trading? Step 1. Pick a broker. Make sure they are regulated by a major authority like CFTC, NFA, or FCA. Step 2. Register and verify. You'll need to upload an ID, proof of address, and sometimes even income verification. Step 3. Fund your account. Brokers accept bank transfers, credit cards, or even PayPal. Step 4. Download a trading platform. The most popular ones are MetaTrader 4, MT4, MetaTrader 5, MT5, and CTrader. And my advice? Start with a demo account first. Practice trading with fake money before risking your real cash. Let's be real. Trading is risky, but if you manage your risk properly, you can protect your account from major losses. Always use stop loss and take profit orders. This automates risk control. Risk no more than 1 to 2% per trade. This keeps you from blowing your account. Control your emotions. Greed and fear are your worst enemies in trading. And remember, Forex is a marathon, not a sprint. All right, that wraps up this complete beginner's guide to Forex trading in 2025. Here's what to do next. Open a demo account and practice risk-free. Learn more about trading strategies and technical indicators. Subscribe to this channel for more expert trading content. If you found this helpful, don't forget to like, comment, and share this video. Let's build a winning community of traders together.